let me show you. This candle is the new 4-hour candle on 5 minutes. It is doing its thing, creating a wick before going down. What we are looking for is simple. This is our golden area. We are looking for, imagine this, one single 4-hour candle could be the difference between making $50 and making $1,000 in a single day. Sounds crazy, right? But here's the thing, most traders ignore the power of the 4-hour close. And because they ignore it, they miss out on one of the most consistent setups in the market. Today I am going to show you exactly how I use one 4-hour candle close to predict the next move with high accuracy, and I'll break it down step by step so you can use it too. Here is the challenge most traders face. They are glued to the charts all day, they enter randomly on every small move, and at the end of the day, their accounts are drained. Not because the market is impossible, but because they don't have a structured playbook. Now, what if I told you the market already gives you a signal once every 4 hours? You don't need to chase to recognize when the market is setting up for the next big push. Stick with me because in a few minutes I will give you the exact entry model I use, where to measure, where to enter, and where to avoid, so you don't get trapped like 90% of retail traders. We are focusing on the 4-hour candle that closes at 4:55 a.m. New York time zone. The candle starts forming at 1 a.m. NY time, and by the time it closes, we have a full picture of what happened in that session. Here's the key. If that 4-hour candle is a clear marubozu candle like this one, it means it's a strong, full-bodied, and showing momentum. Then the probability is around 50% or higher that the next 4-hour candle will continue in the same direction. So if we get a clean bearish marubozu at the 4:55 a.m. New York time close, there is a strong chance the next 4-hour candle will also push bearish. That's the edge we are exploiting. Now here is how we refine it. Place your Fibonacci from the high to the low of that candle. Because this candle is bearish, we are going to place from the high to the low. Now what we are looking for, this gives us 3 key levels. 50% area is an optimum entry area. This is the golden area. Let me mark it for you. It is between the 50% and 25%, and this is the 75% of our extended entry area. If price comes to this high, you need extra confirmation. Think of it this way, between 25% and 50% is your safe hunting zone. Below 25% is early, it's too early. Above 50% towards 75, it's risky and might fail. Let's zoom in. What we are looking for is after this 4-hour close, the next 4 hour before it goes to bearish, it needs to manipulate, comes back. This is the 4-hour wick, for example, taps into this area, around this area, something like this. Price was like this, the 4-hour closed over here, right? The next 4-hour opens, comes back, mitigate or touches this area, the optimum area, gives you something like this to go down. What we will be using is just a rejection. After it mitigates the optimum area of the recent 4-hour that closed, what we are looking for, a rejection, break of the rejection, maybe retest, then one marubozu candle to set our sell stop below it, something like this, stop loss above it, take profit 1 to 3, maybe 1 to 2 if you like it, but 1 to 3 is optimum. Let's look at a real example. We are at 1 a.m. 4-hour candle. This candle closed. What we will do is mark the high to the low like this. Now we can go to 5 minutes to look for an entry. This is stupidly simple. Keep in mind the price closed at 4:55. This, let me show you. This candle is the new 4-hour candle on 5 minutes. It is doing its thing, creating a wick before going down. What we are looking for is simple. This is our golden area. We are looking for a rejection, and price comes back to our optimum entry area, giving us one marubozu candle to continue. Now price is showing intent. We can set stop loss above this swing high. We have two bearish candles confirming that price will continue, plus we have the price inside our optimum entry area. Target 1 to 2 up to 1 to 3. Always set sell stop or buy stop. As you can see, take profit hit. When I first tested this, I thought it was too simple. No one candle every 4 hours. No way it could be that reliable. But the more data I collected, the more I realized simplicity with overcomplication kills traders. This model gave me clarity. I didn't need to chase every session. Just wait, mark, and execute. And that's the same discipline I teach my students. Wait for the A plus setup, execute with confidence, and walk away. If this clicked for you, don't just watch and move on. Start marking your 4-hour closes and practice this exact model. You will be shocked how often it works. And if you want the complete system, I trade with daily markups, my 100 trade case study journal, the 90-day consistency program, and my personal Q&A support. Check the link in the description or comment.